So every mutual fund has a fund manager who is in charge of that particular funds. He is the one who takes the crucial calls of what to buy, sell, and hold until when. So when a fund manager changes, how does it impact the fund and the investor who are invested in it? Let's understand all of this with Piyush Chandra, Head Mutual Fund Products, IIFL Securities. Piyush, good evening. Welcome to the show. We are clearly going to talk about and discuss about the importance of the fund manager and the repercussions that a fund might have once the fund manager quits or there is a change in the fund management team. Tell me something, how essential it is for a fund to have a fund manager who's been handling or who handles a fund for like good amount of years, because the fund obviously needs to have consistency not only in their strategies but also in their returns. In fact, every year it should be better. But what goes into having a consistent fund manager? How does it impact a fund's strategy or fund's performance?
Good evening, Kavita. First, very valid point. But first, let's understand how mutual funds are managed, right? And obviously, it's very important for a fund manager to be with the fund for a fairly long period of time, because it gives a consistency in terms of how the fund will be managed over a period of time. If we can just spend half a minute on how funds are managed, it will give a better picture or a clarity to our investors that what goes in while managing a fund. So just to sum it up, mutual funds are run in a specified framework which is monitored by an investment committee, of which the fund manager or the investment manager is a part. Mostly, fund managers, when they move out or fund manager changes that happens, does not affect the performance that much, as there is a big team behind managing any fund. No, they consist of analysts, co-fund managers, which support the fund manager in the overall decision making. So that's how mutual funds are managed, and obviously it's very important to have a kind of fund manager or a consistent team behind the scenes managing the fund, because it will obviously give you a solid track record in terms of how the funds are managed, and and it also gives a comfort to the investor that the investment objective of the fund is being met.
All right. Very well explained the importance and the role of fund manager. But then let's talk about what does it mean when a fund manager of a particular fund changes. But before that, can you help us understand, through your experience, the times when there has been a change in a particular fund, like maybe a very hit fund manager changing the fund, or there has been change in some kind of a strategy of a particular fund, or maybe at the management level also. But then let's stick to the fund management side of it. Through examples, if you could just explain the times where there have been a change in a particular fund manager of a very hit fund, and that may or may not have hit the fund's performance.
So, talking about the change in fund manager, I'll just I would take I'll go a little back in few years. I'll just give you one example, which is was a live example at one point of time. In 2010, there was a departure of a star fund manager or a CIO from the then third largest mutual fund house, and that CIO is now one of the best CEOs in one of the asset management companies that we have, and probably he's a very well-read, very well understood CEO in the industry right now, and even at that point of time, he was one of the best, better fund managers in the industry. So when he left, for advancement in his professional life, post which a senior fund manager from the same fund house took over the responsibility, and had done a turnaround in the structure in which the equities were managed by this fund house. What has happened is, one of his frameworks, in his frameworks of managing dynamic asset allocation fund has made him, has made their fund one of the largest asset allocation fund in the industry, even now. and he was very instrumental in making us, he was very instrumental in making this dynamic asset allocation category a separate category in itself. So sometimes, when the fund manager moves out, it is a blessing in disguise for the investors. It can be a good thing that can happen to investors.
How important it is for a mutual fund investor to understand and know who is the fund manager and what exactly are his strategies like?
So it is very important for anyone, for any investor to understand who the fund manager is, because it's after all, it's your money, it's hard-earned money that you have actually given to a professional to manage. So the track record of the fund manager, how he has performed in various other funds that he's been managing, what is his thought process in terms of the overall investment objective of the fund is very very crucial, when it comes to money management.
Tell me something. Uh, uh, it is very important, as you just explained us, that investors should know what exactly is the strategy a fund manager is adopting for a particular fund. But then, when there is a change of a fund manager, is there anything to worry from an investor's point of view, or one should just keep continuing investing in a particular fund and wait for the changes to show up and then accordingly take a call? Because the choice of a fund manager, especially if you're invested for a very long time, matters a lot. So how does it impact? What does a change of fund manager for a particular fund means?
So very, aptly put. I'll take a minute to explain this. See what happens when an investment manager moves out. Most of the investors react negatively to the fund management change. They move the money out of the fund. But I feel that there are four ways an investor should react. First, and very very crucial and important, and I'll just give you a small example here. When we get, at times when we get fever, we actually take any medicines ourselves. And when the fever doesn't go in a day or two, we actually go to the, to a doctor or an expert in this case. So and similarly in financial management, I would think that the investment expert, or your financial advisor is the expert, in advising funds. So first and foremost, consult your investment advisor. Understand more about the new investment manager who's actually taken over the fund. Be very demanding from your investment advisor. Extract all information that you can, extract about the new fund manager, his previous engagement, how he has actually managed portfolios in the past, what had been the performance of those funds. So this is very very critical. And number two, you should be extra vigilant. Look at the performance of the fund under the new fund manager's supervision. Investors, as I said, has to be extra vigilant in monitoring their funds for any change in performance or in portfolio rebalancing. This can be tracked very easily by portfolio turnover ratio, which is given in the fact sheet of the funds. uh, Verify, and you third thing that they should do is they should verify whether the investment manager departure has happened due to advancement, or is there any, things to be worried about. Also look at, situation and then take a call. Don't take a call in a hurry. Spend some time with your with financial advisors. Understand where and how, the new fund manager is planning to take the fund, and then take a call. Don't be in a hurry to, pull your money down, pull your money out, just because has been a change in the fund management team.
So this is about an exit of fund manager, but then what if a very hit fund manager joins a fund, okay, and his track record has been very excellent? So does that mean that you should just latch on to that fund just because you've got a hit fund manager?
Not necessarily. I'll just again give you a very interesting example, and this is, very early part in my career. I've just been, 2 3 years in the industry, and I thought, as you rightly said, star fund managers can make this, make for super performance in scheme. If I can just again take you back in time, one of the mid-size asset management companies in 2006 roped in a fund manager who at that point of time was considered to be a star fund manager or a star stock picker. And they had a flurry of NFOs in 2006, 7 in that bull run on various themes. And when in 2008 market correction happened, the NAVs of these NFOs actually dropped drastically. They became as low as 2.5 to 3 rupees in some scheme, thus incurring a huge loss to the investor. And very soon after that, this star fund manager, made exit from the fund house for some reason. And after that, even though his successors tried very hard, knowing that every rise in NAV will lead to redemption, and have done actually a very good job for the investors. If people would have invested, no, stayed invested from 2006, 7 or 2008 till now, their NAV from 2 rupees would have appreciated to 20 rupees. But I honestly hardly think that any investor would have actually seen this journey. So now at times, even the star fund manager might not be a star anymore when it comes to money management. It is about stock picking ability. Sometimes, market goes in your favor, or sometimes the stocks that you might have in your portfolio might not do well. So it would depend. It is not a star fund manager. Can't be always right.
So, also, this is slightly a different question from the topic that we are discussing now. But then, how can an investor ensure that the fund manager strategy, the fund manager is taking right strategies, given the current market situation? Because a lot of time, what happens is people first of all don't understand the role of fund manager. They don't understand what goes into managing that particular fund when it comes to strategies and the entry and exits, time calls, and everything related to that. But is it possible for an investor, maybe a learned investor, to keep a track of the fund manager strategies and maybe have a checklist with them to analyze as to where is he going wrong or where is he going right? Obviously, you cannot be that experienced or that good at your job. You would have just managed your own portfolio otherwise. But what could be the tips and trips to assess your fund manager's performance?
See, now, if you look at it, very simply put, people who are very learned, who make investment themselves, do their own research, go through the fact sheet of a scheme very, very deeply. So, the fact sheet contains all the required information that needs to be known about the fund, from which stocks that they're investing, to what percentage in each stock, to what is the portfolio turnover ratio, what is the expense of the fund, you know, uh, and even on the debt side, what is the YTM, what is the modified duration, all these details are available in the fact sheet. So all the smart investors go through the fact sheet of the scheme in a very detailed manner. Having said that, obviously I understand that everybody is not very well versed in terms of reading the nitty-gritties of the fact sheet, and that's why I insist on the point that you should consult your investment advisor in a much bigger, much better manner, because your investment advisor is expert. He will give you insights that some other person can't. So, extract as much information as you can. Involve him in your decision making of investments, and make him a good friend. As a good doctor can be a good friend. Obviously, a good financial advisor is even more important. So, as the slogan says, mutual fund sahi hai, or the second part of that is advisor zaruri hai. So, you can be a good knowledgeable person in your own field. Similarly, a mutual fund advisor is also knowledgeable in his field, and is specializes in giving investment advice to its client.
Question to you: when an investor wants to exit a fund, the choice of a fund manager could be the reason. Can that be a reason? Should that be a reason?
In I'll say in most cases it should not. Looking at only one parameter, which is fund manager or change in fund manager, should not be the only reason. Obviously, it's I there should be all other matrix that should be considered. How is the fund forms? How has been the track record of the fund house? Is the fund house following, or the scheme following, the investment objective that the scheme that has been laid out? No, there are various factors, and that's why I feel either you do a thorough research before making any exit decision, or consult a investment expert before making any exit decision. That's my take on the overall thing.
All right, Piyush, that will be all. Thank you so much for being on the show and taking our viewers to this very important topic and understanding the role of the fund manager. On that note, let's take a quick break, but then post that, let's talk about your credit score. How can you build a good credit score? And if at all you don't have one, how can you rectify it? All of this with Harsh Rungta after this break.